Hi everyone, welcome to this week's edition of CMC Markets. It is April 23rd, the end of the day in the US. This is Mish Schneider, Chief Strategist of marketgauge.com. And we've got a bit of a sell-off in gold. This is the cash contract. We'll show you the momentum thereafter. But what's interesting to me is we did talk about the fact that if it got to 2,300, then that was probably a good buy. And so far at this point, that turned out to be the case. As you can see here on my cursor, that we broke just slightly below 2,300, popped up to close at 2,322. So as far as the cash goes, to me it seems that you have kind of a good area here at about 2,336. And so if we hold today's closing price and we clear 2,336 in terms of cash, most likely it means that gold will at least resume some level of a pop, and perhaps where we would have to see next in terms of resistance would be somewhere closer to 2,355 to 2,360. Of course, if you take a look at the closing levels here, that's really super important. So on this day it closed, and these are rough numbers because I can't really tell with my cursor, but let's say it closed at 2,392. So that means if we get a cash close above that, there goes gold back up probably over 2,400 and then maybe up to 2,500. However, if we have to look at the flip side of it, underneath an opening today of 2,322 or where we closed, we may have to go back and test this 2,300 level again. Looks like we went just slightly lower today, the low being 2,290. I even think 2,280 could be an area. And maybe we just need to do a little bit of work before we have some fresh news. But overall, if you take the top of the move from the breakout of 2,100 to 2,400, 2,250 is exactly a 50% retracement. Does it have to go 50%? No. But that's kind of what I'd be keeping my eyes on right now, is that as either your risk point or that as the area where it finally finds support, or maybe it doesn't even get there, but that would be the rock bottom. And what I see at this point, I don't think anything in the fundamentals of gold has changed. So just to show you the same chart, though this time with our real motion indicator with it, we did have a mean reversion. I remember when I spoke to you last week, I said the momentum was looking pretty good, but as you can see, we had obviously a breakdown in momentum. And the last time we've been below this Bollinger Band was really back here where the price was much lower. So it doesn't really mean that much. But what it does tell me is that at this point, we could easily pop back over that momentum. But again, let's use that number of the closing level today and then 2,355-ish. And we get through there, I think you'll see the momentum go up as well. So again, I think the price is interesting. Obviously a correction, you would expect a lower momentum, but nothing at this point that is convincing me that the gold market is over. Now we move on to the silver. This is the cash silver market, again with your 50 and your 200-day moving averages well below. And again, no real reversal pattern. And this day was obviously a spike high based on geopolitical news, but not necessarily a reversal high like we've seen in the past. Of course, this was a kind of a nasty bar yesterday, but money started rotating into other places. And of course, there's hope that things have at least stopped its escalation in terms of the Middle East, but now we just got a whole bunch of new financing going not just to the Middle East, but also going to Ukraine. So one never knows what's going on there, and I'm going to talk to you for a second about some of the soft commodities. But nonetheless, this kind of correction, once again, we're looking at maybe somewhere between $26 and $26.20 as our major support level if we get down that bar. And at this point right now, considering that we broke down early and then rallied and closed above where the lows were yesterday and where the closing levels were yesterday, that's a good sign. So you're going to look at that $27.32 as pivotal. Obviously we get above, I think we can go work our way back up closer to these levels here at 27.85. If we can't and we break down even under today's open, which was 27.15, then perhaps, like I said, we'll see that move down to around 26.20 or so, maybe even 26. So if we go above these levels here and we get up into this area we just talked about at 27.84, 27.85, obviously the next area would be 28. And again, I still believe that this over a long period of time hasn't even made its real move yet. It's still an amateur hour, if you will. And very quickly, here is the momentum chart like I showed you in gold. This actually also just had a little bit of a mean reversion to the sell side. But I think the selling already happened in advance, kind of like what happened with gold. So I wouldn't worry too much about the momentum here. Instead, I would play the numbers as we just mentioned them. That brings us to West Texas crude. And you can see, obviously, we're getting a little bit of a pop off of the $81 support level. And also, we do have potential for a head and shoulders top. Here's one shoulder, the head, and another shoulder potentially forming. But we wouldn't worry about that unless we broke down under 81. Plus, it would be negated now if we got back over these shoulders, and I would say probably a move over 84.12, which would be above the high that we've had today, might prove that this is not really anything more than just a double time of testing major support at 81. And 80-81 was definitely the breakout area. 85 would be another one, and once we broke down under 85, that's why we're seeing the correction. But overall, we get through this 84.12. I think we can easily go back, look at all this resistance we've had in these sort of mid ranges up at around 85. We get through 85. Most likely you'll start hearing some rumors about things going on again with oil and the Middle East. And then, of course, through 87. This thing is still on a breakout, as volatile as it is, nature of the actual overall commodities market. I don't see any reason why we get through those levels. We're not looking at 90 and higher, and of course that would certainly impact the price of gold and silver. For consistency's sake, this is the dollar yen, and even though the dollar weakened against the euro today, and by the way, the London market made new highs that it hasn't seen in over a year, the yen continues to struggle. Whether or not the Bank of Japan will intervene, of course, remains to be seen, but what we can see right now is that although we had made a new high in this relationship up here at 154.88, today's closing price was just slightly below that at 184.82. Today's high, of course, was also around that same level. It's hard to tell here. It looks like it did not take out the high of yesterday, but with an inside day, you know, at this point, what would really be meaningful would be if we wound up seeing a reversal in the dollar yen and a close underneath this particular low, which would be at around 154.04, 154.04, 154.05. Then I would say we finally see some kind of a movement where the yen would get stronger and possibly that move back down to 152 where we had all that consolidation. Obviously, we continue to hold up at these levels and we take out that 154.88. Perhaps this is not done. And of course, we have to go back to some historical levels here, and you can see that in terms of the dollar yen, we are at all-time highs. It was So before we go on to our last couple of commodities, I wanted to show you Nasdaq cash because we had Tesla report, and even though the earnings were terrible, talk of keeping things more economical, lower cost cars, really trying to focus on reining in costs, etc., has given the stock a pop after hours. It's now up 8% after it reported earnings. So it went down as low as 140. And now, as I'm speaking to you, it's trading at 154. Of course, it still has a lot of resistance, but it was extremely oversold. And it also held a major monthly moving average, which is the 80-month, but I can show you that another time. So that means that this is really interesting now because as in Tesla, as a considered growth stock, will this be enough to move Nasdaq up even higher? And of course, we have a lot more major earnings going on this week. So as you can see, if you move this line here, I don't think there's anything majorly significant for where this closed today at 17,513. But I would say just a little bit lower. If we take a look at 7,350, that's going to be the area that we have to look at in terms of the support. And if we get through today's highs and also the closing prices, then I think our next area that we're going to be looking at would be up in here at around 17,651. Whereas our biggest resistance level, of course, is going to be 18,000. Now, if the rally doesn't sustain or we get disappointing earnings in some of the other big growth stocks, then of course we start to look now at more correction potential, where 17,000 of course held last week. That would be the most major support if we can't get through that 17,500. And if we break down under 17,000, we still have a lot of room to go. And I would say your next area of support would be somewhere in these levels right here at around 16,565. And then, of course, ultimately, where you did the most work before the rally would be down here at around 16,000. So here we are looking at natural gas, which is a commodity that there was a whole story about, needed for fueling AI, of course. All commodities right now are in low supply and high demand as the AI boom, supercomputers, even EVs require natural resources in order to operate. So we did have a phase change here to a recuperation phase. It's over the 50. You can see it stopped at a little bit of resistance, but right now, to me, this looks like a confirmation of a bottoming pattern. And considering where we are, we would want to see obviously the 50-day moving average hold, which would be right here at around 175. And if we get through today's high 188, then we're looking, of course, at the last time we were up at around 2, and we get through 2, I think we can see ourselves a nice rally, maybe back up closer to this 200-day moving average at 246. And lastly, I just want to show you, this is a weekly chart of May sugar. In terms of the cash price, I'll show you momentarily, but you can see that this 200-week moving average has been a good support, and it goes back to 2020 when it had its major breakout. So to me, this is quite compelling. With an inside day, you would be looking in terms of the May contract for a move over 20. I think that could confirm that this too has found some area of support. And if you look at the corresponding cash chart, it's already over 20. So essentially, if this is really going to be a bottom, and it looks like with a new low and a higher close the next day, that's very possible. We definitely want to see it get back through all this resistance right here, and that would be a move over $20 and about 27 cents. Okay, that's it for now. Hope you have a great week. Thanks so much for watching, and bye for now.